going to use this chart here. Everything's on it. We're going to drop down into a daily. Okay, so now when we get into a daily, we can see a whole lot more definition in terms of the delivery or inefficiency. Price trades that run here. This is that additional little ramp up in here, and price breaks down. When do we get our market structure break? From this perspective, on the daily, we don't get it until this low is violated. That's here. Once that occurs, price trades back up into these levels right here. Now, what did it trade up into? What's the significance of this area right in here? What's actually happening? Well, we have this down close candle here right before the up move. So isn't that the breaker? No, it's not the breaker. We have this down close candle. Even though we have a lower low here and a lower low here, this candle here went down the most. So where was sell side delivery originating from? This candle here. Even though we had it in here, this candle's inside of the range of this candle. So this is insignificant. It's this one. So if we have that understood, using our rules, here is our breaker, bearish breaker, after the break in market structure, after equal highs have been taken. See, that's what's missing from everyone that's gone through free tutorials. Everybody has a YouTube channel now. Yeah, they all have a YouTube channel, and they're teaching breakers. And occasionally I'll go on and I'll make a little snide remark about it. That's not right. But I'm not trying to poke fun to be mean. I'm just being honest. You know, some of them just don't have it, and they're trying to promote it because, you know, whatever. Long and short of it is, there's rules we have to go by, and we taught it in mentorship. So here's our breaker. Price trades out. Look how many times it spins there. 1, 2, 3, 4 times, and then gives up the ghost. Then what's it do? It trades right back up here. Does it run these equal highs now? No. It doesn't need to. Why? Because it's already mitigated all of this movement in here. There's no necessity for these equal highs to be ran. Oh, think about that. Because everyone else would have been on Twitter, or everyone else would have been saying, look at these equal highs. We're going to run these equal highs, and we're going to expect that to keep going higher and run those. What's the narrative? Stops, been taken, breaker, mitigation, mitigation, mitigation. Can't do it. It's already showing you that it's respecting the breaker. There's underlying narrative of a sell program in this particular currency. So price starts to decline. We have internal range liquidity as an entry here, external range liquidity as an entry here. Okay. Each one of these vertical lines is a full month. Every one of these bars is an individual day. If we want to look at the perspective of one shot, one kill, if we look at the perspective of this breaker offering real resistance, okay, because if you're looking at classic support and resistance, where do you draw the line at? You see, it's a fallacy. It's silly. You have to understand what has been happening in the marketplace and think outside of the candles. We don't look at candlestick formations. We look at what price has done. Buy stops have been cleared above equal highs on a weekly basis. Distribution came in. Market structure break. Last down closed candle, right for the up move. This is our breaker. Smart money's going to want to mitigate right there. Boom. That's how you draw lines to support and resistance. That's real support and resistance because it's based on institutional order flow. That's not taught in books. It's not taught anywhere but here. When you have that understanding, we know that if the market's not wanting to go higher from this price point in here, every one of these days in here, where's it wanting to go? Well, we have these levels delineated from the weekly chart. But look at the daily. Forget the weekly chart for a moment, okay? Not to remove its importance or significance because it's greater than what I'm about to show you here. But when you couple it with what's being shown in the daily chart, it refines it even more because everything now has a lot more clarity. We have a breaker here. We have a low, a high in between to the new low. Sell stops here, relative equal lows as well. So this candle close 97.48. That could be the actual down move it trades into, and then we could get probably a bounce there, maybe. Doesn't have to, but that's an objective from where we are right now, and that's range. It gives us a range to work in. Also notice that we have very clear and discernible fair value gaps using the daily, and it's still fitting the narrative that we've outlined relative to the weekly chart. So there's a fair value gap right here. We have one between this low and this high, so I'll just carbon copy this. Swing that up here. Right there and there. Okay, so we have a fair value gap there. Notice that the fair value gap that's rating on the daily, it sits directly, perfectly over top of the weekly consequent encroachment, which is the middle of the fair value gap that's defined in the red lines. That's a weekly